Even if the worst is behind us, what does the new normal look like for consumer spending and for these stocks? For more, I'm joined by Lisa Ellis, a partner at MoffettNathanson, and Chris Donat, who is senior analyst at Piper Sandler. Great to have you both back and to check in. Chris, I actually want to start with you and the optimism you see on shares of American Express. It's interesting to me that Amex is still down 30% on a one-year basis, but Visa and Mastercard are actually up about 11%. So what is it about Amex to you, which I think would be really, really hit by the drop in travel and corporate expenses, that has you attracted here?
Yeah, so you're right. There is a hit to Amex from a drop in what they call, T&E, travel and entertainment. It represents about 20% of the spending for them. What I think is an offset to that one, or diminishes sort of the impact, is the amount of revenue that American Express generates from the transactional part of the card business. It's only about half of the revenue for the total company. They're still going to make money on net interest income and card fees and a bunch of other sources that are much more steady. So yes, there's a hit, but I think it's relatively small. And at this point, we're guardedly optimistic about how credit quality will perform for them. There's a lot of noise actually around the new CECL accounting standard and what that means for near-term earnings. But anyway, I think for the out year forecast, you can have some optimism that the credit quality issues will stabilize and the amount of provisioning they will have will stabilize too.
Yeah, and I know you're still bearish on Mastercard, still concerned about a lot of that cross-border activity that they're losing, neutral on Visa. Lisa, you're more constructive on those names and especially on PayPal. And here's my question. So many people emphasize PayPal winning in online commerce, but it uses, certainly my user experience now is it uses Visa and Mastercard. I know there's ways around it, but I wonder if so are they all just winning together now? Can you explain a little bit how this trade works?
Yeah, sure. Yeah, they are all winning together. So you're right. The majority of transactions through PayPal are funded by a card. And so but PayPal is making a spread on those transactions as well, as are the card networks. So they all benefit. The difference there is that PayPal is all e-commerce, which, of course, is seeing an enormous secular uptick as a result of the pandemic with people all sheltering in place. Their numbers were the biggest positive surprise, in our view, out of the whole earnings cycle these last few weeks. For example, they posted 43% growth in their checkout volumes in April. That's more than double the rate in February. So you're starting to see this really sharp uptake in e-commerce volumes as people are buying more things online.
It's amazing. I can't even stay logged in. I try to use PayPal and Venmo, and I always get kicked out. Chris, what about the levels of consumer spending? What is the new normal you think going to look like? So understandably, we're starting to come back, starting the normalization process, but where are we going?
Yeah, I think the new normal is certainly going to be lower than where we were. And some of my colleagues at Piper Sandler have done some nice work with doing consumer surveys, and you're showing consumers are cautious in what they're thinking about spending. So I think you'll see some help in the United States from the stimulus checks, but you have to ask yourself, what does the spending environment look like after the stimulus checks? When people are, if unemployment's still elevated, people are going to, I think, be kind of cautious on their spending, which does weigh on overall spending activity on Visa and Mastercard and everyone else in the payment sector.
At least I'll give you the final response to that. PayPal as well is a stock that is up 30% on the year, so certainly hasn't suffered during the pandemic. But how much do you think people are pricing in, whether for them, for the traditional cards, a V-shaped recovery, a swoosh? What's in the cards right now?
Yeah, right now I'd say that as much as it's clearly completely uncertain and no one really knows, at this point it's more of the swoosh style, sort of slow, steady improvement. We saw Mastercard's new numbers they just released yesterday for May, and the U.S. numbers are at least looking a lot better. U.S. is currently running down 6 year to year. In the beginning of May, just to put a reference point on that, it was down almost 20 in April. Wow. And if it gets back to about 0, that's about where we were in the financial crisis. So just if folks that, are kind of trying to make sense of what to think about these numbers, what we're aiming for is we'd ideally at least like to get back to a flat year-on-year number that's comparable to 2009, 2010. That's certainly what we've got baked into our outlooks for Visa, Mastercard, PayPal. Anything better than that would be upside. And I think, that's kind of what we're hoping for. And honestly, that's -6 number already in May was a positive surprise yesterday from Mastercard.
But still, I mean, to hear that zero is only, getting us back to 08, 09, it's really interesting. Thank you both. It's good to check in again.